Hello everyone and welcome back to my daily report market videos with me, Rich Market Analyst at Hantec on Friday 12th of July. Looking at euro-dollar, which survived a little bit of a rocky session yesterday. The gains that we saw in the morning were driven lower into the close as the market reacted to that better than expected US CPI data, the inflation data, but we've seen the market holding that increase and that rally into today's session, about 12-15 pips higher on the day. Now, I've said in the morning report that I think that euro-dollar is increasingly a range play. If you see in the last, if you draw a line from the beginning of Feb across there, basically you're trading between, in a 300 pip band, between 11.10 and 14.10. And within that, you've seen the fact that the market has held on to the higher low at 1180, sorry, with that 1190 support the other day, and rallied basically back to the middle of this, where there is effectively a pivot band around 1265. So this is basically mid-range within all the moving averages. As you can see here, they're fairly tight, only around about 80, 90 pips apart. And so that's not even true, only around about 60 pips apart, sorry. And the RSI is at 50, MACD lines are hovering around neutral, and the stochastics have ticked higher. So it's fairly much into a neutral position on euro-dollar. Yes, the near-term outlook has improved, but again, it's not decisively higher, certainly given yesterday's candle. And I think that this is a market that is now looking for probably the next direction within this 300 pip range. You've seen the rally, you can see on the hourly chart, back towards the sort of pivot area of this old trading band around the 1260 to 1280 mark. You can see that is overhead supply, resistance, and ultimately has provided a basis of resistance today. And you see the hourly indicators as well, above 40 on the hourly RSI for the last 3 sessions, but now sort of dropping off back under 60 again. So fairly much neutral configuration on euro-dollar at the moment. And it could be that the market is now going to be looking out for the next signal. But certainly within this trading band of 300 pips is fairly neutral. There is a very slight positive bias given the fact that the market has been rallying for the last 3 days. But there is significant overhead resistance around about sort of 1310 on the hourly chart. 1310 starts to come in. And then you've got all these lower, all this old support becomes new resistance, 1350 as well. So lots of preventative aspects to this chart which would restrict rallies, but for now I think we're waiting for the next signal. So with that in mind, I wish you good luck in your trading today. Please click here to subscribe to my videos, and also you can go to our website to join up to my trading webinars. Good luck in your trading, and I'll speak to you soon.